Buying a home is one of the most terrifying things you can do. If you think about it, it's probably going to be the most expensive purchase you have made in your lifetime, and most of the time you'll be hundreds of thousands of dollars in debt. That's not the scary part. The scary part is not knowing what to do or how to do it. In this video, I'm going to talk to you about the top 5 mistakes you can make as a home buyer. But before we get into it, my name is Pete Candelario and I am an associate broker with eXp Realty and one of the owners of RE Solutions XV, a residential real estate and property management company that loves to educate and help people find solutions for all of your real estate needs. And if that's you, don't forget to subscribe. And if you have a specific question, our contact info is in the description below. Now let's get into it. The first mistake is using a pre-qualification for determining how much you can qualify for. A pre-qualification letter is given by lenders to borrowers, and it states how large of a loan you'll likely qualify for. The key word there is likely. Since the pre-qualification is based on the information you submitted to the lender, it does not take into account any additional information that the lender may need after the loan goes through underwriting. Basically, you're filling out an application and providing information on your income and expenses. The lender will still pull your credit and they'll work out a debt-to-income percentage. The lower your DTI, the better, and it needs to be no more than 50%. But during the qualification, they use the 50% to give you the max you can borrow. This still is not a guarantee until all of your documentation is turned in and reviewed. And after the 2008 crash, the underwriters may request a lot of documentation throughout the process. Now, even though this is the first mistake, a good realtor would not advise a client to even see homes unless they have a pre-approval letter instead of a pre-qualification. Most listing agents will actually advise their sellers not to accept any offers unless there is a pre-approval. The second biggest mistake is not to have any savings. There are initial costs to buying a home during the process. You will need to be prepared for a down payment, closing costs, and additional funds for inspections, appraisals, and possibly other stuff. A realtor or a lender can tell you about this stuff when you are starting your home buying process, but it is so much easier if you pre-plan this by having some savings in the bank beforehand. Once you start the process with the lender, they will track your spending and bank accounts in order to know why money is coming in or out of your account. You may be asking then, how much do I need in the bank? Well, it depends. If you're doing an FHA loan, the down payment could be 3.5% of the purchase price. And if you're doing a conventional loan, it could be up to 20%. Once again, you have inspections, appraisals, and closing costs to think about. Now, I suggest that you have separate savings for your home buying goals. You do not want to use up all of your savings in the home buying process. You should have an emergency savings account and a general savings account. Now, how much you want in each account is up to you, but suggestions state that you should have 3 to 6 months of expenses saved. How you split that up between emergency funds and general savings is up to you. Mistake number 3 is not having a timeline. This, of course, is very important and depends on what you are buying. If you're buying a pre-existing home, closing is normally done within 30 days. If you're buying a new construction, it can take 6 months to a year. But there are a lot of other variables. Are you currently renting? When is your lease up? Is your credit in good standing? Do you have the savings we discussed above? What time frame do you want to start looking for a new home? When do you want to move in? How long does it take for you to find the perfect home? These are things that you need to think about before you start looking at homes. You don't want to start looking at houses and fall in love with one that you would not be able to move into because of the timeline. A good realtor can help you with this. Now, there are realtors out there that won't even work with you unless you are planning on buying within the next 60 days. Me and my team believe that this is not just a transaction-based relationship, but a long-term relationship with us helping people meet their home buying goals. And it doesn't matter if you're buying now, 6 months from now, or even a year from now. We want to help you purchase when you are fully prepared and the best time frame for you. I'm going to burst your bubble right now. The fourth mistake is looking for the perfect house that has everything you want. This is like that friend that is single and they're only single because they have a long list of wants that no one can meet. Have you seen those dating or marriage shows that they start listing everything they want in their partner and you're like, wow. There is no way. I'm not saying that you can't have a list of wants, but are there things on the list that you can live without? Trying to find a house that checks off everything on your list is sometimes impossible, especially when you're purchasing a home with a significant other. Both of you may want different things and some compromise is going to have to be done. Am I saying that you can't find the perfect home? No, not at all. The home you choose to buy is going to be perfect for you, even if it's missing the concrete infinity pool with a waterfall and slide that lights up at night, or that 4-car garage with the checkerboard painted flooring and car turntable so that you never have to back up ever again. Have an open mind when viewing houses. It may not have everything you're looking for, but are there things that you can do to make it more of your liking? Lastly, the fifth and final mistake is to buy a home thinking that its appreciation will double in a few years and you can sell it right away. Here in San Antonio, we have a large military population and many of them buy homes while they are here. Just like the rest of the mistakes covered before, poor planning will give you poor results. If you're planning to be in a house for 3 to 6 years, then you need to know what you are going to do with that house afterwards. There are only 3 main options. Try selling the property at either a loss, breaking even, or hopefully make some money. Unfortunately, no one can tell you what the market will be in 3 to 6 years, so there is uncertainty if you are able to resell. Make it a rental. You can start your property investment portfolio by making the property a rental property and having tenants pay your mortgage. Now, I am not saying that the rent will always be equal to or more than your mortgage, but rental income can greatly help you make your mortgage. On a personal note, we have a rental property that we had to supplement our mortgage payments for the first 2 years because the rental amount didn't cover it. I didn't mind because even though I had to supplement, I was not paying the whole thing and I was still building equity. Now, you have to be emotionally and financially prepared to be a landlord. And if you are interested, we can talk. You can reach out to us in the contact information in the description below. Lastly, and what you don't want to do is to have it foreclosed, meaning you stop payment and vacate the property, essentially giving it back to the lender. This is, of course, the worst option, and it will affect your credit and your future buying or even renting potential. I wouldn't advise this at all, and if you are in that situation, definitely give us a call to see what we can do to help. As you can see, planning an exit strategy is as important as planning to buy a house. This is not and should not be an impulse purchase. To help you avoid these and possibly other mistakes, make sure you are working with a trusted realtor and other real estate professionals.